First of all, delighted to be back with Coffee Micro. Uh, the Today I'm sort of giving an overview of the FY24 performance and a little bit more color on some of the recent flash announcement, but also going through primarily more color around our performance in our SaaS transformation, what we've achieved, and certainly hopefully give everybody a picture of where it's going. So straight into it. First of all, as always, I'd like to pay my respects to the traditional custodians of the land upon which we gather, and pay my respects to their elders past, present, and emerging. So straight into it. We launched our SaaS compliance product at the very beginning of FY23. Since that time, we've actually seen a 58% CAGR, and we have no reason to believe that that won't continue. Our sales pipeline continues to grow, and certainly seeing no question about demand in the market for simplifying the whole process of managing compliance within an organisation. And fundamentally, that's what's been the driver for our SaaS growth. So the meeting customer current and future needs, being a trusted advisor and a resource for information around what's coming up, challenges, but then very much spending time with organisations to understand their pain points. And it's really been clear that our advantage is not being a compliance platform. Our advantage is being a platform that simplifies the administrative burden, the cost overhead in time, in people, in the opportunity cost of people within organisations not spending time on the reason they are part of that organisation, but effectively fulfilling a very important role. So recognising the absolute importance of compliance, every business has an obligation around compliance. Those requirements are becoming materially more complicated, and they are multiplying. At what used to be the case of a relatively well-defined and stable set of requirements has now transitioned into requirements and obligations coming from multiple sources, external and internal, along with shareholder expectation, board expectation. The whole idea that compliance is no longer seen as a task that must be done and is reviewed in the case of an incident to something that is expected to be embedded within the day-to-day operations of an organisation. Once you get to that point, making sure that being able to accurately adhere to those requirements in the least disruptive manner becomes incredibly important. And that is the space we play in. So the other thing is that across the myriad of other sector enterprise products that go into an organisation, whether that's HRIS platforms, whether it's workforce management platforms, payroll systems, et cetera, they will all have or claim to have some portion of compliance management, but it's effectively an add-on. And further, it is focused on, again, the actual outcome of the compliance. There's not a real focus on the user experience and the simplification. So our whole advantage is, and what we've got this direct feedback from our customers, has been around making their life easier. The risk manager who gets to 3:00 Friday afternoon and is frustrated and sick of chasing workers for pieces of information that were absolutely, have to be submitted by Friday 5 p.m. is eliminated. Our platform does that, and it escalates and it tracks and gives you all of the tools to be able to simply be the overseer of that process rather than the one driving it. So the other way to think about our platform is when I mention things like HRIS or the other workforce management tools, et cetera, is we don't compete with them, we welcome them. The function of our platform is an aggregator of all of the enterprise data while securing the digital connection to workers for that information where required, whether it's procedural in confirming a start of shift safety list, in healthcare confirmation that you have no symptoms or anything precluding you from doing your shift today, and the appropriate PPE you have access to it, etc., and all doing it in a secure way to further protect the privacy of data. Our platforms are all security by design. It's imperative. Customers trust us with a myriad of data that flows through our system, and we are very, very focused on that. It is the highest priority we have in our company. And then further, the need of simplifying compliance is global. So the opportunity, I've spoken about it before, and it certainly remains a key part of our strategy, is that following the expansion and further expansion and growth within Australia and New Zealand, this is a product that translates perfectly to any market. Our product is compliance requirements agnostic. If there is back to source verification of credentials or screening, anything required as part of that process, we can integrate with whatever local source is required. And whether that's via a partnership, white label, it doesn't matter. The platform has been designed to do that. The benefits of simplifying the entire day-to-day process, however, is universal. So let's have a look at our FY24 results. Our annualized SaaS revenue based on Q4 was 11.2 million. The overall year on year, we've seen a 90% increase in our SaaS performance. Significantly is that 2 million of that growth has come from brand new contracted customers during the course of the year. And so we have already that known revenue stream leading into this year and the next of a further pool of contracted customers who will increase their revenue contribution over the following months and years. We've seen an 83% uptick PCP on our percentage of revenue that was SaaS, and it's now at 34%. Significantly, Q4 was 38%. So that we have an objective to get at least 80% of our revenue to SaaS over coming periods, and we see that eminently achievable. The other thing to actually look at across some of the key brands of our customers, all sectors, all areas, and our targets of mining and energy sectors, along with healthcare, along with education, are our strongest growth sectors. But the other one I'll point out there, and I'll mention that a little bit further as well, we have continued to win government departments. And the significance around that, even if they're not the largest revenue contributor, not that they're not insignificant, but it is the fact that governments and government departments, with all of their due diligence and investigations, trust our security, trust our process, and see benefit in the simplification process, actually makes, well, is a point of validation of the platform, but B, further, it is really helping us with other prospects and other organisations. So when they ask us about how do they do their due diligence and what are the things that they need to look for, the conversation that says, well, this, and this government department uses, pretty quickly brings an end to the conversation. And we certainly see that being a big asset. And then announcing a new major label. So in this last quarter, we've closed the Kmart and Target group. We see that as a very big opportunity that will grow over time. And obviously, as part of Wesfarmers, that is very, very interesting. We've achieved all of those growth metrics, the increase in revenue, the drive, etc., while having an increase to our net promoter score or our favourability rating amongst our customers, an industry average of 55.5, and we've achieved a 63. So very happy with that stat. you do not achieve particularly SaaS growth without a strong customer satisfaction rating. It's a further point that, and not mentioned on this slide, but to outline it, since the launch of our monitored compliance or simplified compliance product, we have not lost a single customer. Right now, our churn is 0. So all of that, what does it translate to? We've had a 225% NPAT increase, now at $800,000. It's to put that in perspective, because quite frankly, I'm nowhere near satisfied with the 800. But a couple of years ago, I think the group lost about 1.8 million per annum. So it's a material turnaround, and you see the total revenue there, along with EBITDA increasing 43%. So where do we see our advantage? Where or why are we confident in the future? All of the things that we have on this page in terms of the position we have today, we believe we are very well positioned for ongoing SaaS growth and increased profitability, etc., all of the metrics that shareholders expect. One of the key ones, and I make this point, it's one of the first times we're starting to outline the story in this way, because I don't think the market has truly understood the growth of our SaaS base, the direction and the trajectory we've been on. And I suggest people think of us as a startup who's achieving 55% CAGR on our SaaS product. And by the way, we have $20 million in legacy revenue that we can also call upon. If we were a startup that had just acquired CV Check to be able to mine their customer base for conversion to a higher value, higher revenue SaaS product, I think we would have been viewed very differently from the start. But that is how we should be thought about. So across the group, over 10,000 existing corporate data verification customers generating the $20-odd million in legacy revenue. They are our advantage certainly amongst other startups, in that we have a ready built-in pipeline of connections and relationships with customers that we can take on this SaaS journey. Further then, we've seen material increase in the number of integrations and organizations coming to us to integrate, and all of which give us further outlets and opportunities for growth at a second and third party level, and particularly calling out the addition of APRA for medical connections, and also Workday are obviously highly significant. So what are we planning for FY25? In short, continue to build out and answer that customer need and customer demand. We have instigated over 500 customer interviews and connections and industry panels where we gather feedback. We get the information from customers about what they're looking for and what they need. And in short, the headline of it all is self-service. They want to be able to dynamically create their compliance requirements, not rely on our professional services teams, so that they can actually, in real time, generate a new requirement, almost drag and drop it straight onto a role or a worker or a department, and it immediately flows out through the system. We will deliver that this year. That drag and drop idea, that the next iteration of our user experience will be a drag and drop. Here's a requirement, whether it's predetermined or one you've custom created, a connection to a new learning management system for cybersecurity training or whatever else it may be. And you literally can drag and drop it onto, as I say, a role, a worker or a department, and immediately they will be notified via the on-site app that they've got a new requirement. They can complete it right there, right then. The same along with the dashboards, being able to dynamically create intelligent AI-enabled dashboards that give them exactly the views that they need for their role, for their time. And you can create as many as you like. Along with features in on-site, we'll be creating around geolocation. When you enter a new premises, a new site, particularly for aged care workers or disability workers, somewhere they've never been before, are there induction requirements? Is there anything that's changed since you were last there or has happened recently that you need to react to. All of that intelligently driven by the platform, along with alerts and alarms. The idea of being able to submit via the on-site app if you've got an incident report you need to complete, if you've got any kind of instant emergency, you'll be able to do that via on-site. And along with then triggering all of the incident reporting or whatever else is required in that instance. And then in something I'm very excited about, we've been working on, and we will launch this year, an integration to a risk matrix. When you have your inherent risk and then moving to your risk mitigations, those mitigations will automatically create compliance tasks. Because if they're not done, you can't demonstrate that you've mitigated the risk as you've committed to doing. So now you get real-time visibility of your mitigated risk across the organisation and the awareness and alerts and the ability to intercede in the situation where they're not done. And then further integrations and expansions across our distribution partners. This is about growing. We've been very happy with our progress to date, or more importantly, I think, very happy with the confirmation from market of our product market fit and the opportunity that will continue to grow and the need within the marketplace. And making it faster to bring customers live via the self-service means we can actually translate those contract wins into revenue faster. So bottom line is we've demonstrated since we've launched the product that we've got proven execution. We've taken the company profitable, and now again for the second year, we're cash positive for the year. So all of the metrics showing the right trajectory, some of them are 55% CAGR. I'm very happy with. So we believe it's time to invest and accelerate. We have the resources to do that. Over $10 million in cash sitting in the bank. I'm asked all the time, what are you going to do with it? Well, time to accelerate. And we have the ability to do that within our ongoing operations. So I'm very excited, very bullish about the year to come. Mark, back to you.
Thanks very much, Michael. We had questions flying in there while you were talking, so we'll try and get through as many as we can. Apologies if I don't get to your question. First one, Michael, we'll touch on how much revenue is coming from integrating with third-party customers now?
Look, I don't have that number off the top of my head, but or the accurate one, if I was to give you a number, I would say somewhere between 25 and 30%.
Okay, perfect. And then a question on how is your go-to-market team structured? Are they targeting specific end customer verticals, or are you spending on trade shows, outbound marketing activities, maybe just how you're attacking the market, maybe?
It is very much targeted by sector. So we do a lot of webinars, hosted conferences amongst various sectors. So we recently did one in Queensland where we were invited for the top 10 aged care providers, invited us in to present both the challenges, the upcoming situations, and then some of the ways that organisations can better manage their compliance workflow. We were invited in because we had one of those customers already. Within 6 weeks of that conference, we had 3 more. So it's a really good example of that one. We do some trade shows, etc., but it's not the primary target yet. So we have very much found that sales get sales within word of mouth recommendations, etc. And that focus and the number of customers we've added over the last year has been more than enough to keep our sales team busy. And then along with the invitations across various RFPs and RFIs that increasingly drop into the door.
Okay. I know you touched on it in your presentation on I think you said it was a 20 million in legacy revenue. We've just got a question on that. You still have a base of legacy revenue customers. Have you systematically harvested this pipeline to convert them into SaaS, or is it still largely untapped? Is it, their contracts come up for renewal and then you initiate the
Mm,
conversation, and that just takes time to roll through the system?
yeah, that's a great question and fundamental to the strategy. We are very systematic and identifying them, but we are at the beginning of that opportunity. So, again, off the top of my head, I think we're about 20% through the currently identified opportunity. And that leads to a further point in the way we will view that product space. While it is, and I refer to it as legacy revenue, it's not that we are going to stop offering it. So the CV Check brand is very well recognized. It's very well understood. What I can see it converting to in years to come is purely being a sales acquisition tool. So somebody approaches us because they need a bit of data verified, whatever it may be. That is the opportunity for us to open the conversation, even if we just fulfill that initial request. Because once you've got the relationship with them, you learn we are very systematic about understanding why they're collecting it, what stage they're at, what process. So when we discuss with them the SaaS product, it's not oh, by the way, we've got something else you might be interested in. We come with a informed position of why it would benefit them. And that's one of the reasons we've been very successful in the conversion rate to date.
And yeah, the CV Check, it's a low cost, entry into the system.
Mm.
It's not a big hurdle for them to jump, but as you say, it does open up a broader, more complex and something with more deeper context in
Mm.
terms of a sales conversation. And then a question on what I think they're referring to, yeah, SaaS here. Typical customer size, contract value, targets, length of contract, sales cycle, maybe just I know
Yep.
there's a lot in that, but maybe just kind of give broad stroke overview
Mm.
of a typical SaaS customer.
It's look, it's always very hard to put a framing around the typical sales length of the process. We've had some that have signed within a week. We've had some that have taken 10 months. And quite often the larger ones are the faster. Uh, the the big thing that, again, in some of the stuff we're aiming for FY25 and the self-service, etc., we're going to see the ability for organizations to download access to the product and try it for free for a limited amount of time. I think that's really all the usual stuff you'd expect from a digital SaaS product. I think that's really going to help us with the smaller end of town because our primary target customer at the moment is 400-500 staff minimum. We come into our own when you're in the thousands. The contract term we have, it's a minimum of 12 months, but we have contracts up to 5 years. And obviously there's commercial benefits for those operators or organizations in the longer term. The typical contract size, without putting a number, I'll share that, when we first announced HireUp was one of our first big SaaS wins, and we announced, if I recall, about $250,000 per annum. Most of the contracts we won this year are in excess of that, but they're not big enough now for us to even announce. So then you get the larger ones. We've done one today. That you start to get a picture. We announced BHP renewal because we already had them as a customer. That has they've re-signed for a further 3 years, and you're talking millions of dollars in annual revenue. So it's it is at the moment. If I was to put a number on it, because not to run away from the question, I'd say our average size is circa about $500,000 to $600,000 per annum.
Okay. And then I think it's a question more related to your first slide, that kind of switch into the RaaS SaaS business. Is there a steady monthly cadence of winning clients, or can it still be quite erratic with kind of big lumpy wins like here and there? Maybe just talk to, now that you're more embedded into the SaaS process, how is it in terms of getting sales in on a monthly, quarterly basis?
It's getting the sales has not been a challenge for us. what we have suffered from, particularly in the last 6 months, is it is taking us anywhere between 3 and 4 months to take one of those customers live.
Okay.
And so we'll sign them, and then for the first couple of months there is very little revenue from them. But then we saw in Q4 all of a sudden there was a jump in the monthly SaaS because a few of them then started to come through. So it's the particularly adding some of the targeted features that again I mentioned for this year, which have come directly from customer feedback, is we believe we will accelerate the number of sales wins per month, but also make it faster to go through the process of winning the bigger ones.
Okay, perfect. Folks, we're just out of time here with Michael, and I didn't get to everybody's question. I apologize, but if you do want to pose your question, the email address is there, and I'm sure Michael and his team will get back to you if you do want an answer to a specific
Very
question.
happy to.
Michael, thank you very much for joining us again this morning, and hopefully
Always good to see you, Mark.
we'll have you back in later in the year, hopefully.